Welcome to your interactive study guide on putting a business idea into practice. In this video, we'll cover the essential financial foundations every entrepreneur needs, from setting smart objectives to calculating profit, forecasting cash flow, and choosing the right sources of finance. By the end, you'll be able to apply these concepts to real business scenarios and ace your exam questions. Let's map out the big picture. A business starts with aims and smart objectives. Financial planning then revolves around revenue, costs, and profit. But profit alone doesn't guarantee survival. Cash flow is king. Businesses also need to choose appropriate sources of finance, like overdrafts for short-term gaps or retained profit for expansion. Turning to our core notes, revenue is your top line, calculated as price times quantity. Costs split into fixed, like rent, and variable, like raw materials. Profit is revenue minus total costs. But remember, cash flow tracks actual money moving in and out, which is different. For short-term cash needs, an overdraft offers flexibility. For long-term investment, retained profit is interest-free but only available to profitable businesses. Cash flow forecasting is a step-by-step process. First, list all expected cash inflows, like sales receipts. Then list outflows, such as rent and wages. Subtract outflows from inflows to get net cash flow each month. Add that to your opening balance to find the closing balance. If a negative balance appears, you'll need to arrange finance, like an overdraft, to cover the gap. Let's work through a typical exam question. A candle business sells 500 units at £8 each, so revenue is £4,000. Variable costs at £3 per unit total £1,500. Adding fixed costs of £2,000 gives total costs of £3,500. Profit is revenue minus costs, which is £500. Always show each step to maximize marks. Watch out for common pitfalls. Many students mix up cash flow and profit. Remember, a business can be profitable but run out of cash if customers pay late. Also, be precise with cost classifications. Rent is fixed, raw materials are variable. Always state the time period in your answers, and match the source of finance to the need. Overdrafts are for short-term gaps, not buying new machinery. Let's wrap up. You've learned to set smart objectives, calculate revenue, costs, and profit, forecast cash flow, and choose the right finance. For exam success, memorize the formulas and practice applying them to different business contexts. Remember, a solid financial foundation turns a good idea into a sustainable business. Good luck with your revision.